Welcome to Talk Tickers. You're here for the essential insights from the latest earnings calls, and today we're diving straight into Franco-Nevada Corporation's first quarter 2025 results.
That's right.
The call was back on May 9th, and it revealed a period of record financial performance. What's really interesting, though, is they achieved this without any contribution from their Cobre Panama mine.
Yeah, that's a key point. It was indeed a very strong quarter for them. Franco-Nevada reported record numbers, really, across the board, top and bottom line.
Impressive.
And the success, it was largely driven by, elevated gold prices, for one. Also, the impressive performance of their Hamlo net profit interest, or NPI, and solid output from their energy assets.
So those gold prices must have made a big difference.
Oh, absolutely. We're talking significant year-over-year jumps.
Yes.
Gold up 38% on average, silver up 37%. Big numbers.
Okay, so this price surge has really fueled things. How did that translate into their actual sales volume, their GEOs?
Well, they sold a total of 126,585 gold equivalent ounces. That's GEOs. It was a 3% increase overall. But interestingly, the sale of precious metal GEOs saw a bigger jump, up 8%. So that indicates, real strength in their core mining royalties and streams. And all of this culminated in that record revenue figure you mentioned, $368.4 million.
Which is a huge increase year over year, right?
Yeah, a remarkable 43% increase compared to Q1 last year.
Wow. A 43% jump in revenue is definitely hard to ignore. What about profitability at the bottom line?
Just as strong. Their adjusted EBITDA, that also hit a record at $321.9 million.
Yeah.
That's up 49% year over year.
49%, okay.
And adjusted net income also hit a high $205.6 million, or $1.70 per share. That represents a 51% increase.
51%. So profit grew even faster than revenue.
Exactly. And importantly, they ended the quarter in a really strong financial position, completely debt-free, with $2.1 billion in available capital.
Okay, so record results across the board, no Cobre Panama contribution, and a strong balance sheet. Let's dig a bit deeper into what specifically drove this performance.
Sure. So there were several factors contributing. You had strong output from the Candela mine, for example, plus, the benefits kicking in from recent acquisitions like Yanacocha and Stillwater's Western Limb mining operations. Those boosted precious metal GEO sales.
Ah, the new acquisition's starting to pay off.
Yeah, they even saw their first contribution from Western Limb in Q1, which actually reflected production from late 2024, September to December. And you also had the ramp up of the Tocantino and Greenstone mines playing a positive role too.
Right. You mentioned earlier the Hamlo NPI was a standout performer. What exactly happened there? Why was it so strong this quarter?
Yeah, Hamlo really outperformed, partly due to the higher gold prices, of course, which directly benefit that profit interest. But also there was a $5 million U.S. catch-up accrual related to 2024 performance that got recognized in Q1.
Ah, one-time boost then.
Kind of, yeah. So while Hamlo is expected to continue contributing strongly, the company did flag that the Q1 revenue level was, let's say, somewhat elevated because of that specific accrual.
Okay, that makes sense. So maybe not sustainable at that level, but it still shows the leverage these MPIs have to gold prices.
Exactly.
What about the rest of their portfolio, the diversified assets?
Well, interestingly, the volume of diversified GEOs sold actually decreased.
Oh, how come?
It's mostly a calculation thing. Because gold prices were so much higher, the revenue they got from other commodities, like energy or base metals, translates into fewer gold equivalent ounces.
Right, the denominator effect.
Exactly.
Yeah.
But despite that decrease in GEO volume, the revenue from their diversified assets still increased by a healthy 21%.
21%. Okay.
So it still demonstrates the breadth and underlying strength of their holdings beyond just gold and silver.
So higher prices lifted all boats, essentially, even if the GEO count looked a bit different. Now, I think you mentioned something about different types of GEOs having different margins.
Yes, that's important. Royalty GEOs are generally considered higher margin than stream GEOs.
Why is that?
Well, royalties are typically just a percentage of the mine's revenue or production. So Franco-Nevada has minimal direct costs associated with them. Streams, on the other hand, involve an upfront payment to the miner, and then Franco-Nevada buys a portion of future production at a predetermined, usually low price, but there's still an ongoing cost.
Got it. So royalties are more pure profit leverage.
Largely, yes. And their net GEOs, which is basically GEOs calculated after removing the cost of sales component for streams, increased by 6%. And the company specifically mentioned they anticipate future growth will be increasingly driven by these higher margin royalty assets.
So the overall production, the headline GEO number, only saw a modest increase, but the profitability, the quality of those ounces really jumped.
That's a good way to put it. Now, their cost of sales did increase because they sold more stream ounces. And depletion expense also rose, mainly due to increased GEOs coming from assets that just have higher depletion rates per ounce.
Yeah.
But despite those increases, their overall cash cost per GEO actually decreased significantly. It went down to just $34 per GEO.
$34, that's incredibly low.
It is. And that resulted in an impressive margin of over $2,500 per GEO in the first quarter.
Wow, that really highlights the model's efficiency in a high-price environment. And you mentioned their capital position again.
Yeah, very strong. $2.1 billion available at quarter end. Though technically $1.9 billion net if you factor in the deal they closed right after the quarter ended.
Which deal was that?
That was the $300 million acquisition of a royalty on the Porcupine Mine complex from Discovery Silver.
Ah, yes. So that available capital gives them significant firepower for more deals.
Exactly. Financial flexibility is key in their business.
Okay, speaking of future growth and deals, the earnings call touched on some strategic moves and their outlook. What were the key points there?
Well, as we noted, they finalized that stream acquisition on Stillwater's western limb, and they got their first payment. And then, post-quarter end, they bought that 4% net smelter return royalty on Discovery Silver's Cordero project. It's the Porcupine Complex deal for $300 million.
Right.
And that deal was interesting because it also included a $100 million loan facility to Discovery Silver, and Franco-Nevada also participated in their equity issue.
So a multifaceted deal. How's that equity investment doing?
Apparently quite well. The commentary suggested it had appreciated considerably since they invested, something like tripled, though market conditions can change fast, of course.
Okay, so they're actively putting capital to work. What's their appetite for more deals now? Are they seeing opportunities?
They indicated they are, yes, actively pursuing more growth, and they have, quote, a number of actionable prospects under evaluation. They mentioned seeing a similar level of deal flow in terms of both volume and size compared to last year.
And that's across the board.
Yeah.
Metals, energy.
Seems so. They mentioned opportunities in precious metals, which is, very active right now, but also base metals and energy, and a mix of both royalty and stream structures available.
Okay. And the elephant in the room, or perhaps the mine not in the room, Cobre Panama, any movement there? It's been a big focus.
Well, some potentially positive signals, maybe. The president of Panama has apparently expressed a willingness to have discussions about the mine sometime this year.
Discussions are better than silence, I suppose.
Franco-Nevada certainly views it as encouraging. They also said they've had productive discussions with government representatives specifically about their ongoing arbitration process.
But no concrete resolution yet.
No, nothing further to report publicly at this stage. They did reiterate, though, that they're open to suspending the arbitration under the right conditions to help facilitate actual negotiations.
Okay, so still very much a wait and see, but maybe a slightly more optimistic wait and see than before.
Perhaps. It remains a key uncertainty, but also, a potential source of significant upside if resolved favorably.
Right. What about their energy interests? You mentioned they performed well, too.
Yes, their U.S. energy assets delivered strong results. That was driven by, higher commodity prices, but also good performance from new wells coming online in their existing holdings, particularly in the firming assets.
And looking ahead for energy.
That's going to be largely dependent on commodity prices, naturally, and specifically how operators react to the recent pullback in oil prices. If prices stay lower, it could impact drilling activity and therefore volumes, but usually with a bit of a lag, maybe 6 months or so.
Okay. And what about their overall production guidance for the rest of 25? Still expecting a stronger second half.
Yes, they reaffirmed that expectation, a second-half weighted production profile for the year. Although they did add a little nuance, noting that the impact of higher gold prices and potentially lower oil prices might have some offsetting effects on the overall GEO profile for the full year.
Makes sense. Finally, dividends, record results, strong cash flow. Should investors expect a big dividend hike?
They addressed that. Their dividend strategy remains focused on, quote, sustainable and progressive increases. They have a long track record of annual increases they want to maintain.
But not necessarily a huge jump right now?
Seems unlikely. They emphasize that their primary focus for capital deployment is acquiring more long-life, high-quality assets. So the message was kind of, don't expect an unusually large dividend increase. Growth comes first.
Okay. So wrapping up the analysis part, for our listeners who follow Franco-Nevada or the royalty space, what are the main takeaways here?
Well, I think first, these record results really underscore the strength of the royalty and streaming model itself. Especially when commodity prices rise, their costs don't escalate nearly as much as traditional miners. That leverage is key.
Right, the margin expansion we saw.
Exactly. Second, their diversification across precious metals, base metals, energy clearly provides resilience. Even without Cobre Panama, the portfolio delivered. Third, they're actively pursuing acquisitions, which suggests continued growth potential is definitely on their agenda. They have the balance sheet to do it.
And the deal pipeline seems active.
Yes. Fourth, Cobre Panama. It remains the big question mark, the wild card, but any positive resolution represents potential upside.
Definitely one to watch.
And finally, just that strong balance sheet again, it positions them really well to capitalize on whatever opportunities arise, whether it's acquisitions or navigating market volatility.
Excellent summary. Okay, now for our segment where we put on our speculative hats. Time for This Is Not Financial Advice. What kind of intriguing, maybe slightly crazy trade idea has floated up this time?
Okay, here's a thought experiment, just for speculative discussion, right?
Absolutely. Purely hypothetical.
Considering Franco-Nevada's significant investment in Discovery Silver, that Cordero project royalty, the loan, the equity stake, and the positive commentary around it. Remember that stock jump?
Yeah.
How about this for a paired trade? Go long on Discovery Silver shares, stock ticker DSV on the TSX Venture Exchange.
Okay, long Discovery Silver.
And simultaneously, take a short position in a gold mining company, maybe a mid-tier or junior, that is heavily reliant on a single mining operation located in a jurisdiction known for, let's say, increasing political risk or resource nationalism chatter.
Okay. Long Discovery Silver, short, a single jurisdiction miner with political risk. What's the thinking there?
Well, the logic or the hypothesis is that Discovery Silver's progress at Cordero, now with Franco-Nevada's backing, could offer potential upside that's somewhat independent of just the gold price or broader market wobbles. It's project-specific potential.
Right. De-risked to some extent by FNV's involvement.
Possibly. And conversely, if geopolitical instability or resource nationalism does flare up in certain regions, it could disproportionately hammer miners who have all their eggs in that one basket.
So you're trying to capture project-specific upside while hedging against or betting against jurisdictional risk elsewhere.
Kind of. But look, this is highly speculative. Paired trades are complex. Shorting is inherently risky. Single jurisdiction risk is hard to time. This is absolutely not a recommendation.
Understood. Always do your own thorough research. Talk to an advisor.
Exactly. It's just a mental exercise, a way to think about the different factors at play.
A provocative idea for sure. Okay, well, that wraps up our deep dive into Franco-Nevada's first quarter 2025 earnings call. We've covered their pretty impressive financial performance, their strategic moves, and some key things for investors to think about.
It was definitely an interesting quarter for them.
Absolutely. What stood out most to you from this analysis, we really encourage you to revisit the details, mull over the implications. As you navigate the market, remember that knowledge, that understanding is truly your most valuable asset.
Couldn't agree more.
Join us next time on Talk Tickers for another insightful breakdown of an important earnings call.